Hey, welcome back to another episode of the Owner Ops Podcast. I'm your host, Austin Gray. In this episode, we have Ben Gavin from Dialed In Bookkeeping joining us. Ben is going to share with you how to set up your bookkeeping. If you're an early stage owner-operator, or if you've just started your business, this episode is going to be very applicable to what you are doing. He's also going to give you some basic definitions that you need to know as a business owner. And then finally, he is going to give you a strategy for implementing a job costing system. If you guys have anybody else who offers professional services for service-based businesses, have them reach out because I am opening up more sponsorship slots in the podcast. I hope you are getting value out of it. If you are, please take 30 seconds and leave us a 5-star review on Apple or Spotify. It sure helps us grow the podcast. And if you're listening on YouTube, we would sure appreciate a like and subscribe. You'll get notifications each week. And then finally, check out the newsletter. We are putting a newsletter together from each episode. We're distilling all the learning lessons out of that, and we send it to you in a weekly email on Saturday mornings. So go to ownerops.com/newsletter. That's OWNROPS.com/newsletter to get those learning lessons to help you grow your own service-based business in your own local market. Let's jump in. If you are a land clearing, excavation, grading, or snow removal contractor, check out landservicemarketers.com. LSM is the same growth agency I've used to grow Bear Claw Land Services from 0 to over 7 figures of revenue. We've created a seamless process for owner-operators to upload photos and videos from the field, and LSM will do all the heavy lifting for you on the back end. They'll do all the editing, all of the publishing, all the social media management, and they'll run your paid ads to bring you more leads so that you can close more high-ticket jobs. Check out landservicemarketers.com. All right, welcome back to another episode of the Owner Ops Podcast. I'm your host, Austin Gray. In this episode, Ben Gavin is joining me from Dialed In Bookkeeping. Ben, welcome to the show.
Thanks, Austin. Appreciate you having me on, man.
How did you get into the bookkeeping business?
It's kind of a long and winding tale, but that's what podcasts are for. So I'll give you the story. So it started back in college where I was walking to class one day and there was a flyer on the ground for a College Pro window cleaning franchise. It was be your own boss, run your own business. And that was when I was like 18. And so if you're unfamiliar, College Pro was formerly, rest in peace. There's probably a bunch of College Pro people secretly out here. It was like they would teach you how to run a business. And it was just like a not rocket appliances trade, right? So we did window cleaning, which you learn how to do window cleaning in 2 hours, and then you learn how to run the business for 2 days type of deal. And so we did that all through college, and we crushed it. We did a really good job, and I was totally hooked on running my own shop at that point. The reason I stopped doing that was because when it netted out, there was like a 20% royalty because the risk from the franchisor side was super high because it's college. Like I was 18. I was like one of 10 people who actually made them money. So the royalty was really high. So that wasn't sustainable and I didn't want to mess with that. So after school, I went into software sales for a little bit and then ended up back in the service land. My old coach who had been at College Pro with me worked at a restoration company, so property restoration, so fires, floods, sewage backups in homes and businesses. We'd come in, and I started actually as a tech because they didn't have any managerial roles or anything, and I was like so desperate to get out of my office job that I was like, I'll do like literally whatever you have. So I was on call there. I was water restoration certified, cutting down walls, sucking up water, and did that for about a year. We had like no systems or processes, and so I ended up implementing a full company-wide field management system, which kind of was my introduction to QuickBooks and like how does the time that we log on the job tie back to the financials. This company now does, I think, like 25, 26 million, but at the time we were doing 2 to 4. So it was a much smaller organization at the time. So I ended up doing that. But then like in a small company, if you're the IT guy, like you run out of things to do pretty fast because you get everyone ready, you get them locked in, you get them trained up. And then they're like, all right, cool. We need you to go back in the field. And I was like, I kind of like this technology stuff. So ended up going back to software sales and then started a business with a couple guys, which was the worst business of all time. It was called the Boot Buyers Club. If you look it up, there's some funny clips on YouTube of us smashing boots with sledgehammers and doing product tests by the railroad. It was really fun. But the concept was supposed to be direct to contractor boot sales because it's the one part of your staff's equipment that you don't legally have to provide, but you're liable if they get hurt. So it's kind of like this ipso fact. So we were like, oh, that's an easy win. It was not. It was so dumb because people are very picky about their footwear and all that. And we didn't test it before. Like if you start a business, you should test it small before you go all in. So we didn't do that. So then that business was failing. One of the investors was like, hey, I have this low voltage subcontractor that I'm invested in Wisconsin. I don't know what's going on with their money. They keep running out of money. Can you go in and be my like CFO guy? Like, I just need you to, you're in charge of all the money. No one gets any money unless you decide. So this guy is a great mentor of mine. He's a decamillionaire, lives down in Florida now. And he was like, I'll pay you a salary starting tomorrow. And that was key because we were like running out of money trying to sell boots to ghosts. And so I had no formal QuickBooks training, but I got pushed in and there were, 12 guys on the team. And I had to figure out like, how are we going to hit payroll? Where's all this money come from? How are we going to collect money? How are we invoicing? Why are we not performing like we want to? Long story short, the reason for their troubles was that when you get on bigger jobs, you want to do progress invoicing so that you can get paid throughout the projects. So if it's like a $400,000 project, you do like 200 up front, then 100 at something, and then 100 at the end, something like that. They were invoicing for 400 for a 12-month project right at the front. So their AR looked like spectacular, but it was uncollectible because it shouldn't have been invoiced yet. So that took us like a month to figure out because I had like no formal training on how all that worked. Anyway, we ended up getting that stabilized, but that was the most stressful 18 months of my life for sure. Like missing payroll by multiple drives through snowstorms to get checks from clients to get to the bank on time to hit payroll. Like if you're in a debt spiral and you need help, let me know. I have some tactics on that if you're a listener, but it's not a fun feeling. I left that because my wife and I got married and then we went to Asia and I worked remotely. And what I was doing remotely was kind of what our business has turned into now, which was consulting with construction and home services companies to help get accurate, up-to-date information out of their team. The bigger the team, the harder this stuff is to manage because you have like 10 people who can go buy materials. You got to track what job it is. You got to make sure your credit lines are accurate. And I had learned that through experience, and now I just did it on a fractional basis after that very stressful, but like hindsight 2020, very, very awesome experience. So kind of started doing that for consulting, and then pandemic came. We came back from Asia and I got another sales job because I was like, all right, the consulting it was floating us in Asia, but it's about 4 times more expensive here in the States. So I got on a sales job because those are easy to come by. Actually launched an exteriors second business during the pandemic because I was bored. Kind of as we were chatting about, needed a project, didn't have enough time. So we ran the Handsome Home, which I still think was a great exteriors cleaning business name that someone can steal if they want. I didn't trademark it. Ran that for 2 years. That got too stressful because my first child, my daughter, was born like right at the tail end of that. But throughout that whole time, I'd been doing bookkeeping for people and helping out. It was easy. It was on the side. Actually 3 years ago today, November 1st, 2021, I decided like this is what I'm going to focus my time on. So I grew Dialed In Bookkeeping from 0 to 45 clients over 2.5 years while also working a full-time job, and then went full-time 2 months ago. And we've already added, I think, 10, 15 more clients since I went full-time. So long and winding road, but now we're here. And so I really like this business. I think it's fun and rewarding to help people get clarity on how they're doing, and people sign up with us for 2 reasons. And I just started and I know I shouldn't do this and I have no clue what's going on. Can you help me get an idea of what's happening? So those are the 2 times we get people, and either way it's fun. So long story, but that's how we got started.
You've got a cool story. It's like, at a certain point in life, things add up, and as entrepreneurs, there's no shortage of ideas, or there's no shortage of hey, there's opportunity here, or I think I can sell boots to contractors because there's a pain and there's a problem, right? Mm-hmm. I mean, I've had my fair share of businesses in my 20s that I tried to start that I'm look back on and I'm like, what the heck was I thinking?
That was the same thing. 20s, I was just kind of taking as many swings as possible, trying to figure it out. And at some point it finally like clicked into something. But
well, it's funny because Ben, how old are you?
33 in a month.
Okay, so we're the same age.
Yeah.
We grew up in the same time frame. It's interesting because like as we got out of college, everybody was doing a tech startup or everybody was in software sales or doing it like the business to start was an e-commerce business. That was what everybody was doing courses on, agencies, you name it, right?
Mm-hmm.
And in all reality, you read about the 0.01% of the 1% of people who do a tech startup and scale it to multi-tens of millions of dollars. And
I jumped in and kind of drank the Kool-Aid on that for multiple times, as you heard. And it's always kind of tempting. Now it's not. But before, like when I was just trying to figure out how is this going to work and where am I going to make my mark, it's like, well, I tried to learn to code. That was a bad idea. I tried to be a web designer. I am, as you can maybe tell by my outfit, I'm not a designer. I'm very bad at anything related to design and tried a bunch of stuff. But if you kind of keep hammering and keep going, you kind of headbutt your way into something eventually. Most people do. A lot of the stories I hear are fairly similar. It's like I used to do this thing and then this thing and this thing, and then I put it all together and now I do this thing. Great.
Dude, it's cool. So true. And what you're in now, bookkeeping, it's like it's a necessary service for every single business.
Yeah.
For every single business. And I don't know about you. You mentioned kids. I'm married, got one kid, another one on the way, and there's no greater motivator. It's like I don't even really care what service I'm offering as long as I'm doing something that I'm building a business where it's a necessary service, people are paying us money, and I'm able to provide a home and a good life for my family. Like that's the motivator right now.
It helps you get back to work when you had to put your son down 2 times at 1 a.m. and 4 a.m. and you got a meeting at 6:30 with your Filipino team. It's like, all right, well, we got to do it. So finding a good service that people need and you provide well, like it's that simple. Doesn't have to be like a mind-blowing crazy. Like if you can build an awesome piece of software and make $1 bajillion, that's good, because I've tried to build software and it's hard, really hard. If you want something a little more manageable and a little more reliable that can still make you a good income, doing things for other people, services it's a great way to go. It's much simpler, easier to start. A lot more competition, kind of. We had one of my mentors, 4 little rules if you want to make money in the service business. It's show up on time, do what you say what you're going to do, pick up the phone, and clean up. If you do those 4 things, you're good. You just got to kind of have those core traits and don't forget integrity, and you're going to be fine.
Striker Digital specializes in SEO services specifically for local service businesses. Bodie and Andy, the 2 co-founders, have helped me get Bear Claw Land Services to the #1 search result on Google inside my state for my specific search term. If you want to learn more, visit strikerdigital.com. That's STRYKER-digital.com.
So we've kind of had similar stories. We've come back at 32, 33 years old to offering services that are just necessary in our own markets, right? Mine was, I started with the chainsaw. I literally just started like cutting trees because people needed dead wood cleaned off their properties and charging money for it. Yours was like, okay, I'm doing bookkeeping services because people actually need this and they're willing to pay for it. So let's talk about getting those first clients. You see this opportunity. What are some things that you recommended to those first people to just start with? And the reason I'm asking this is because a lot of our listeners have reached out and they're like, hey, I've started this business. Take my little brother, for example. He started a power washing business. He's just like running and gunning, just selling jobs, spraying horse trailers, just like making $100, $200 in college, like on the side. Right.
Yeah.
But he's like, I'm building a legit business and I need to like track my expenses. I don't know anything about QuickBooks. I don't know anything about bookkeeping. Where do I start?
Yeah. Sorry, I'm a visual guy. So I got a little tab here that I prepped that can help us walk through this. So bookkeeping itself is the practice of just keeping your straight. There's a couple very simple things that you can do, and with like an hour on YouTube, you can figure this out and have the dead basics good to go in a pretty reliable way. You're going to get stuck eventually because weird stuff happens all the time and you're going to have a lot of questions. But at least understanding the core mechanics of what to do is a good exercise. So the first one is to set up QuickBooks Online. There are other providers. I haven't found one that's better. QuickBooks is obviously a giant in the industry, but their starter plan is still only like $30 a month. And it works very, very well. We have a bunch of clients on that. So no need to make it complicated. The second thing is you connect your bank accounts to QuickBooks. So assuming you know nothing, QuickBooks is a accounting software that helps present financial information. It takes streams of data from banking institutions, and we'll just assume just banks. So that's like checking account, savings, credit card, connects to those banks, and every time a transaction happens, it gets pulled into QuickBooks, and then what we do is we categorize it and we put it in the right spot. So that's what connecting the bank accounts means. So all your data is now going into your QuickBooks, and then your QuickBooks is your source of financial information. Again, if you watch like an hour of YouTube, you can get like the basics on this stuff. And then what happens is when you have your bank feed comes through and you have all your transactions, it'll load up. And I would show this, but we don't have a demo account set up, and I can't show client information. It's contract. I'll try to maybe produce something after for everyone to go through it. But you clear the bank feed. So all your transactions from the last week, what you need to do is you need to go in and click on them, and you say, okay, this one was for sales. This one was materials. This was for gas. So you just categorize what things were. Really, really basic. And then reconciliation is a monthly task. I won't go too deep into that. This is kind of like the most optional one when you're just starting. Long term, it's an absolute 100% must. But what reconciliation means to define for people is, so you have your bank feed coming into QuickBooks and you have all these transactions and information. Well, how do I know that that information is accurate versus what the bank has on file? And so what you do is you go to the bank on your online portal, you get your statement, which is you just go click around and you find your statement for 1 month. And then a reconciliation process is making sure that what is in your QuickBooks file matches what is in your bank statement. So you might be thinking like, why do we do this? It's pulling it automatically, blah, blah, blah. QuickBooks can miss things. There can be duplicates that come through, and you can add things in manually to QuickBooks on accident that didn't actually happen. And so that's why you need to check the bank statement versus QuickBooks Online. Going really far back, the reason we have QuickBooks is before we had software, people did this literally in a book. So there would be a book and it would have 2 sides on it. It was like be like money in, money out, and it would be each account. So sales, bank account, credit card. They didn't have credit cards probably when they had books instead of software, but that's why it's called QuickBooks, and that's why this is a necessary process. Because if you don't reconcile on a monthly basis, you're going to get to a certain point where all your numbers look very weird and you can't pinpoint where it started to go wrong. So that's the reconciliation process. If you have a basic setup, and let's say, your brother's, Austin, your brother's pressure washing, he's got himself, pressure washer, couple jobs, you guys can reconcile on your own. Just spend 20 minutes, watch the QuickBooks Online training on how to do it, and then do it on your own for the first time. That happens monthly. What you'll do is, so you're clearing the bank accounts every week. You reconcile every month. By the way, clearing the bank feed weekly, if you're doing, if you're just starting out under 500K, this should take you 10 minutes. Reconciling monthly, this should take you 20 minutes. If you get stuck and you don't know what's going on, it'll take you longer. Feel free, if you want, you can send me a direct message on Twitter and I'll try to help you out. And then the basics of reporting. So you're doing all this. Steps 1 through 4 are essentially organizing your transactions to make something that you can look at and make decisions off of. So it's like you have this whole Lego set, you put it together, now it's, the Death Star or something like that. So now that you have all your stuff sorted and reconciled, you can look at your reports and you can look at these figures and you can help get an idea of what's going on. So revenue, aka sales, is how much money you received from customers for performing services. If you put money into your bank account from your personal checking because you're low on cash, that is not sales. That's something completely different. That's out of the scope of this conversation, but that is not counted as sales. Revenue is only money that you've received from customers for doing stuff or for planning to do things if you're getting a deposit. Second thing is the cost of goods sold. So these are expenses, money going out, are directly related to fulfilling the service for your customers. So pressure washing, that's chemicals, water if you have your own water. And then I also like to throw gas in there for the production vehicle. So like if you have a truck that you use solely for work and it's used to get from job to job to job, I throw that in there because if we don't have any gas, we can't run the pressure washer, we can't run the truck. So gas helps us run the job. This gets nuanced over time, but to make it easy, if your truck is only used to go drive to jobs and to do things, put it in cost of goods sold. If it doesn't, we'll put it down here in expenses. Say you're driving around to do estimates, or maybe you want to split it 50-50. Again, to keep it simple, pick one, stick with it. This next one, GP, is gross profit. So there's two ways people talk about gross profit. And some people will say profit, and everyone who's posting something on like Twitter about a screenshot about something, they rarely are showing their profit numbers. They usually are showing their revenue numbers. You can't eat revenue is a good thing to remember, right? So what the calculation here is, gross profit is revenue minus cost of goods sold. So a customer pays you $1,000. Pressure washing, your margins should be fairly high. So let's say it costs, pay a guy to do it. The job takes 4 hours. He's getting paid $25 an hour. Maybe there's 2 guys on the job. So you have an $800 gross profit. That's what that would be. So $1,000 in revenue from the customer to do the job. And then minus the $200 you're paying labor. You have a minuscule amount of chemicals and water. So let's just say that's like 0 for now for easy math. Your gross profit in a dollar perspective would be $800. So gross profit is super important because it's just, in my mind, it's the second most important number behind the sales number, because let's say you do this $1,000 job and you pay $1,100 in labor, you just lost money, right? And so if you're not tracking your gross profit and you're not learning how much money you're making on your jobs, then you can't improve and create more profit for yourself to grow your business. You need to keep your gross profit as high as your market can tolerate for the good of your business, providing a good service for your customers. There's also what's known as the gross profit margin, or GPM. So this is your gross profit dollar amount divided by your revenue, aka percentage of sales that becomes profit. This number is super useful because in our happy pressure washing example, we made $800 out of 1,000. That's an 80% profit margin, which gross profit margin, which is pretty nuts. Let's just keep it positive and say that we're going to do that. Now, when you go to bid bigger jobs, smaller jobs, you have that marker in your head where you're like 0.8 is what I will make on the job. So that's how you can use that. So like, let's say you're doing residential power washing, little home, and then you get like 5 McMansions in a row where you can just take, okay, I'm going to make X percent on this based on my knowledge of my previous jobs and their X more square feet, and I can do my math and then get a number that will work for you. The thing that happens to a lot of people in this, Austin, is like, if you get started, you start rolling, you don't know what your numbers are, you're just bidding randomly and you have no idea if you're going to make money or not. Doing your books and knowing your gross profit margin, and then being able to post job, take a look at that and see like, okay, so I was budgeting for, when we did window cleaning, it was like, all right, I thought this would be 10 labor hours and then I'd make 60% on that. It looks like it was 14 and I made 40%. Where did I go wrong? And then you can change up how you estimate, do your estimates. So that's how that is super useful. I can't harp on this one enough. Just understanding your gross profit, which is how much profit you make on a job on a percentage basis, is super useful. So anyone who's just starting out, if you get your transactions sorted and you can get revenue, COGS, and a gross profit number that's accurate, then you're ahead of a lot of people. The next 3 are real easy. Expenses are, this is like overhead stuff that you pay for that is not job related. Let's say this is auto repair, insurance, garage rent, software. That stuff you try to keep as effective and efficient as possible. You don't want it to go to 0 because that's probably not good, but you don't want it to be too high because that's not good either. Net operating income, and then we'll take NOI out for now. So then net income is the bottom line, gross profit minus expenses. How much we made on jobs minus stuff we had to pay for in order to run the business. Those would be like my dead basics. And I think that took me like 15 minutes. So I'm sorry that I was just chatting the whole time. And this scales as well. So like, this is the same stuff I talk about with my biggest clients. The main thing that becomes a problem that's when you get bigger, so like 4, 5, 6, 10, 20 million, is just the mechanics of actually tracking your gross profit becomes very difficult. So this is the same stuff that big businesses look at that you can use as a small business. Like if you understand it when you get started, you'll be in a good spot. So anyway, long-winded answer to the question. I hope that we're still there.
This is an incredible overview, especially for anybody who's getting started who doesn't know the definitions of these terms. I believe you put it in very basic terms, and I would agree with you. Like if you're just starting your business, rewatch that because you did a really good job, Ben, of explaining that. Now, what I want to be cognizant of here, you mentioned in pressure washing the 80% gross profit margin right there. Like I want you guys to hear this. If you're just starting out, is that going to be your gross profit margin whenever you're starting a pressure washing as a solo owner operator? Yeah, maybe, right? You want to make sure that you are calculating your time. Make sure if you're doing the job, make sure to add your labor in there for what you could pay someone else if you were to hire someone else to calculate your gross profit margin. Then as you grow the business, Ben, I'm curious to hear what you see your clients' businesses do to that gross profit margin as you grow.
When you go from just you to hiring someone out part-time, and this is a really difficult, like, to be honest, this is a really difficult part of going from 0 to like $1 million, is going from just you to adding someone part-time to then like somehow getting a truck and then adding someone full-time, because you can't scale to $1 million doing it on your own in most trades. Like if you're a high-end cabinetry guy, I got a client of mine who does that. He can clear $500,000 just him because he's like an artist. Pressure washing, painting, like if you're painting houses, that's not artist.
The point here that I would try to make is like as you add labor, that gross profit margin, like 80% is a skyrocketed gross profit margin, right? Like that's not normal. So an average business, what do you see? Let's take a painting company, for example. What does a painting company need to target for average gross profit margin? And real quick, if you're in the roofing business, go back and listen to Sam's episode because he talks about his target gross profit margin at the $22 million mark.
Yeah.
But I'm interested to hear your perspective from managing books.
Pretty much industry wide, not just for painting, most home services companies. What I try to tell people to aim for, and we don't do advisory services. What we do is more just like technicians, but I think of like 150-25 when you're in that 0 to 100 or 0 to like 2-3 million range is what you want to try to aim for. It's a good mark. So 100% is revenue, 50% gross profit margin, 25% net income. I'd say that because it's really easy to remember. It's pretty good for a lot of companies. Like if you can do that. So my painting clients right now, they're always shooting between 50 to 55. That's what they try to go to. So 45 to 55% gross profit margin. But in the way they count it, which I'd be very interested to get in the weeds with Sam. I listened to that episode about how he counts it, because I have a roofing client who does more than 40, but I think we're counting it differently. Usually how I count this is gross profit is revenue, so sales, minus labor and materials and permits and gas, not commissions and marketing. We'll leave that out. For simplicity's sake, when you're just getting started, your sales minus the labor money you pay out, minus the marketing, or minus the materials you pay out, minus any gas associated with the job, that number should be half of the sales number. So again, $1,000 job, a good target if you're paying other people to do the work, right? Because you need to have that leverage if you want to grow. If you have other people do the work, which you need to do at some point, I guess you don't have to, but have other people do the work, aim for 50% take home. Totally doable. You got to be disciplined about it though in a lot of services, because what you're going to end up doing is you've got a lot of jobs early on because you're very generous with your price and your time. And now you need to be not as generous with those. And that's an uncomfortable thing about growing, is you now have to charge more to your, aunt's friend because you have 3 guys going over in a truck that you're insuring instead of just you doing it. So that's a change in mindset you have to have as you get bigger.
It really is. And the friends and family thing is a tough one. Go back and listen to Brock Peel's episode. He has a rule for doing business with friends and family. And it's still hard to this day, because it's like, man, as a good community member and as a good person, it's like you want to like just take care of your people. But at the same time, you're running a business, and like what most people who have never ran a business don't understand is how it's like, dude, do you realize how expensive it is for me just to get that piece of equipment there and to turn that thing on? I have to charge you. You know what I mean? Like, otherwise I'm just bleeding cash on the back end.
And one thing I used to do when I was running my first business, I remember this. I was like, I'll just do it faster. That's also a bad idea. Don't just do the job. You need to go do it right the first time. And you can flip all these reasonings in your head, just write them down. It's like, oh, I can, and then flip them into the sales conversations. I could do them faster. I can't rush the job, ma'am, because or else we might do a good job. We'll have to come back and you won't be happy. So again, all these different pieces of friction and opportunity, you can use those from a sales perspective, but you can't. Don't crush your own margins, because then you run out of money and you're done.
Definitely. Yeah. So we're getting a little off track here. I think you gave a great overview, though, of sort of like what someone starting out needs to think about. From Dialed In's perspective, though, if somebody is doing that, all right, hey, Ben, I've been able to just clear my bank statements, do the reconciliation. Let's say I'm doing 400K of revenue right now, but I need some help here, right? Like my time's being pulled in many different ways. I'm wearing many different hats. I'm doing sales. I'm doing some fulfillment. Like, I'm still hiring. Like, I just need somebody to help me with this bookkeeping. Can you talk about, like, when you take a client at that level, like, what are some things that you guys handle from the bookkeeping perspective at Dialed In?
Yeah. So at that point, you're usually in the spot where you can afford to have someone else do it for the basic reason that you need a better usage of your time. You need higher leverage activities for your time. So the things that we'll typically handle will be processing the bank accounts, will be doing your reconciliations. We do it on a weekly basis, pretty much what I recommended. We do the same thing. We just have a built-in team with checks and balances and processes to make it extremely reliable. And we also provide live reporting. So everyone gets a Google sheet with your numbers that are updating every hour. And you don't need to check your numbers every hour. That I have one client who does that. He's kind of a crazy dude, but he's doing a great job in his business. So the reason we have that set up is that when you do go to look at your numbers, you know that they're accurate and up to date, right? So at the very basics, we'll just handle the fundamentals well, answer questions, make sure if anything comes up, we can handle it. And then we'll also clean up usually the last tax year and this tax year as well, just to make sure everything's accurate, because there's always a couple things that we need to move around. But yeah, when you are looking to hire a firm, the things I would look for is, if you're at that kind of $500,000 range, depending on if you have basic needs or if you need to job cost stuff, reliability, just a good reputation, reviews from other people. It's a referral heavy service. So if you know someone who does something like you and ask who they use and they're happy, you'll probably be happy as well. And then the things to really check on are, now that you've done a little bit of bookkeeping on your own, right? So just go in and check, when were the banks last reconciled every once in a while? Excess transactions in my bank feed. Those are the things that you can check very simply, just to see, like, is my bookkeeper keeping up with what I need? Because it's a weird industry where it's a lot of older members of the workforce who do this, and they're just overwhelmed with clients. Maybe they don't charge enough, but also they've been around for a long time. Having the up-to-date part of the information is key. So those are a couple things I would recommend people look for. Get a referral. That's always a great way to do it. And then, you still have your login, so you can check your bank feeds, you can check your reconciliation histories to make sure that things are staying up to date. They should be contacting you when they do those things, but if they don't, you always have the way to double check.
If you haven't signed up for the weekly newsletter yet, go to ownerops.com/newsletter. That's OWNROPS.com/newsletter. We summarize all of the learning lessons from the interviews with the guests on the podcast, and we distill those into short, actionable tips, tricks, tactics, and strategies that you can use to grow your own local service business. Sign up for the newsletter at ownerops.com. That's OWNROPS.com.
What stage of business do you recommend someone who has started as an owner-operator start looking to outsource this?
Well, there's two schools of thought on it. One is, do you know that you want a professional to handle this for you, and you do it when you start? And that's usually with folks that have a little bit more funding. Like if you're, for your brother in college, he can hack it together himself and should probably learn how to do it. and do it for a little while to get the hang of what's going on. If you're doing this on the side and maybe you have a W-2 or something else and you can afford for someone else to do it because your time is really affected, then like month 3 to 6, once things take off. Usually people reach out to us if they don't start right away. A minimum amount is usually around about $250,000 in trending sales. That's when we get a lot of people who do reach out. So this is getting to be more than I can handle, and I want someone else a little bit more reliable who can help me out on it. Or if you have a panicky feeling and you don't know how anything is going, that's the other time that you should reach out to a bookkeeper. That's the second most popular reason people reach out to us. Just they're like, I don't know what's happening. I need help. So any of those 3 situations are really probably good trigger points to reach out.
One of the things that was most challenging for me in the beginning, especially as an owner operator, it's like when you're starting and you're doing sales and you're helping your field crew, you're still leading the field crew. You basically going from like site visit to book job to back to the field to running a chainsaw or cleaning houses or whatever service you're offering, to at night or early in the mornings, just trying to wrap your head around like making sure everything's tightly kept. And so like when you're running 1,000,000 miles an hour, it's like, oh crap, I need these materials on this job. So I run to the hardware store or whatever, and I grab these materials, and I'm just like going 1,000,000 miles an hour, right? Tracking those expenses and tracking the receipts were one of my biggest challenges in the beginning. It's just because I don't like to like stop. You know what I mean? When I'm in go mode, I'm in go mode. But I believe it's something that's important. What is your recommendation for early stage owner operators in regards to receipts?
I think just to comment on one thing you made, go mode is the default setting for almost all of our clients. So this is a very common deal. Receipts, I think the IRS rule is that if you get audited, you need documentation for up to 7 years, which is a massive pain in the buns. What I always recommend people to do is when you get a receipt, take a picture of it on your phone before you put it in your pocket. At minimum, just take a picture of it. That's the easiest thing to do to start, because usually people will stuff them in their wallet and then you come back to it 100 years later. You don't need to throw those away. You can keep them for a while just in case, but you also have the backup digitally on your phone, which is just a really easy way to do it. Very simple system that anyone can do. So I would just start there. When you get into the area where you need to job cost your information, which is you want to know your gross profit margin per project, it gets a lot more complicated, especially if you have a big team. But very simply, if you're just starting, go to Home Depot, they give you the receipt. If they ask a job name, it's a good practice to put the job name on there so you can do some napkin math on how much you made on that project. Take a picture of just the top third, because they print it like a foot long. You only need the top third, and then that's pretty easy way to do it.
Job costing. Let's jump into that, because this is where it starts to get complicated, and you mentioned it.
You want to know how much you made on each job. So like with your business, you do big jobs. Like you got a huge machine, you got a couple people, you got big numbers thrown around. You want to know how much you made on that job, because it can swing high or low, and if you miss big, and you don't want to miss big. Made a second little graph for this, and I won't go into it as deeply as the last one, but I just want to share with people kind of what things you would need to think about if you wanted to do this on your own, which you absolutely can. Let's go through just each piece. So revenue, you want to know what revenue in your bank account came from what customer. That's going to come from your field management system. So you likely have one of these, and then you can tell where this data came from. You also might have to look at checks that you get from your bank account feed, and you need to turn on in QuickBooks. You get the QuickBooks Plus plan. You turn on track income and expenses by customer, and then you need the field management system to input all your job names so that when you go to your bank feed, you can categorize the check deposits and the credit card deposits by customer. That in itself, that's how you start with revenue. So the next piece would be for materials and credit card management. This is the most complicated piece at a high level. If you have a team, you do not want one person on the team to be coding everyone's receipts. You want every person who spends a dime of your money to be liable for coding the information. So there's a couple tools that you can use to do this that are up here. If you give someone purchasing power, then they must code it for you, and you have to tell them, like, if you don't code your stuff or if it looks sketchy, it's coming out of your check. This is super common. I had a client once where one of their staff bought a fishing trip on the company card, and they caught it when they did the reconciliations at the end of the month. So that's not fun. I hope it never happens to you. But if you're just starting, the easy way to do material management is text to confirm purchase for your staff at Home Depot and Lowe's. Can't recommend that enough. So if they go, they have to text you and you have to confirm it. And then what happens is that transaction then goes to QuickBooks. You can go into your Home Depot or Lowe's account. You can see what your tech put as the job name. Then you code it to the job through there. Last way is labor and payroll management. So your guys are going to work, let's say they're in Jobber and they're clocking in and out. Jobber does a great job of tracking, and a lot of these field management systems, they do a great job of tracking labor by job. Then when it hits your QuickBooks file, you have to split that up into the projects themselves if you want to have QuickBooks be your root of all job costing. So what happens is your payroll provider, where you put it in like Gusto or ADP or whatever. Use Gusto, don't use ADP, please. It's just much easier to use from everyone's perspective. So they post a journal entry to your QuickBooks file that shows how much money got pulled out and who it went to, and then if you got to cut it up into the different jobs. Now, the one thing people ask me is like, why don't we just job cost in? So people ask, why don't we just do this in Jobber? Because we're already like pulling the job information in there. Everything's already in Jobber, Contractor Foreman, or one of these other deals. The reason for that goes back to our earlier conversation, is because you can't reconcile any transactions in those systems. So here's a example of how this would work. Let's say that your team's punching in time, right? And this used to happen to me all the time. Someone leaves the clock on overnight, and then they punch out in the morning, and then you forget to edit it. And then now you edit it manually on a spreadsheet when you go to run payroll because you don't have time to go edit it in Jobber as well. And then blah, 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 blah. So over time, if you're not having that field integrity in there, there's no double check or reconciliation process for time in there. But when you do it through QuickBooks, you have a number that came out of your bank account, and you can reconcile that against the number of hours per week that people spent on what jobs. Job costing, payroll, if you want our little deal on that, this is kind of the map for it. I won't go through it now. The other thing is for materials, if they're adding in materials to one of these systems, again, they could, instead of putting $100, they could accidentally put $1,000. There's no way in any of these tools to double check what was put into the system at a certain time period against what actually occurred in the bank account. So that's why using a field management system, usually, almost every time, has flaws over just job costing through QuickBooks. Now, people will say the next thing is, what about the sync from the field management system to QuickBooks? They usually suck, is the thing. No offense to all these tools. Usually they suck and they break, and it's a major pain in the buns. So that's why when we get into situations where people have a team and they want something job costed, a high majority of the time we're doing it out of QuickBooks, and then we're producing job costed reporting out of that data. But we need to get information from the credit card management system and from the field management system to be able to code the root data that is double checked to reconciliation process out of the bank. And then we produce these job costed reports final through there. There are some field management systems that do work and they do a good job, but when they break, it is an absolute pain to go and fix them. Then you have to reconcile two systems at once instead of just one. Some field management systems are like, so for example, in the insurance claim business, they have like one tool that the insurance companies own that they have to use. So we do it in there for those guys. But for most people, like if you're under $1 million, you should job cost in QuickBooks. Everything else will be inaccurate.
Okay, so one of the biggest questions I had, we just implemented a job costing system internally. One of our biggest questions is, where do we log these receipts, these expenses? So I'm going to ask you that question, and you've got a category up here for credit card management.
Yeah.
Like, where and how do those expenses get logged?
Is it from company credit cards or like vendor accounts or subcontractor bills that you're paying, or all three?
let's do all the above. Let's start with credit cards.
Okay, so if a guy has a credit card in their pocket that they can spend money on, our most common, the most robust, but also kind of hardest to use tool is called Expensify. So what happens is Expensify is an app on your phone. It's connected to just your card. So if you have an Amex or a Chase card, business-wise, you can order a bunch of those for your team. And you can put limits on them. You connect that person's card to Expensify. Every time they make a purchase, a new little thing pops up. Bing! That was your transaction. You need to code it. They have to take a picture of it. They need to add in the customer name. They need to add in the department. That's optional. And then they need to add in the category of the purchase. And then your team, or usually this is our team, but a client's team will go through and they'll approve in Expensify, which is an additional software on top of QuickBooks, everything that's coded correctly. And then you have your outstanding versus your accurately filed transactions per person off the credit card management. If you're just starting out, I would really recommend, if you can, bill, spend, and expense is a great tool. They do a really good job as well. And then Clear is newer to us, but the way their system works is the credit card for the user, every time they make a purchase, the user gets a text. And there's a link in the text, and they have to click on the link, and then they code everything that way. So they add the picture, they do the job name, and then they do the categories and potentially the division. So that's for credit card management. This one, why it's the most difficult is because it has the most people you have to train. That's those darn humans getting in the way. So that's why it becomes difficult. But if you have a system, you can have the main thing you need is you need a reason to have a bite with your credit card users. So in Expensify, Clear, Ramp, Bill, Spend, and Expense, you can see who has not coded their things and how many and how old they are. That's what you really need when you're managing a spend system like that. So that's credit cards. That's what we do through there. Subcontractor bills.
And real quick, that syncs, all those apps sync with QuickBooks?
Yep. So Expensify will have its own. So like your bank feed now for your credit card goes into Expensify instead of QuickBooks. And then only approved transactions in Expensify, you click approve and move to QuickBooks. Then the approved ones move over to QuickBooks. Clear works in the same way. So it's like when you have a credit card management system that you need for your team, all the bank feeds that we talked about at the beginning of the call, they shoot through this filter, which is the credit card management system, before they hit the final in QuickBooks. So yeah, that's where those go. And then they will always be the last thing that are ready for close of books and reconciliations, again, because of the human involvement piece, people getting behind. Did that answer your question?
Yes, it did answer my question. Where my head goes is, all right, and we just went through this, so this is why it's so pressing.
Sure.
How does that team member categorize that expense to the correct job? So the reason I'm asking this question is because Jobber, we use Jobber for everything. Okay. Mm-hmm. Like our project manager is quoting out of Jobber.
Yep.
The customer is created in Jobber. We're invoicing out of Jobber. Mm-hmm. But obviously QuickBooks is the end all be all. Mm-hmm. So what you're telling me is there is a way for Jobber and QuickBooks to sync every single job mm-hmm. with that customer name automatically. Mm-hmm. Yes, correct?
Yep, 100%. Okay.
And so in that scenario, the field crew member who is logging the expense from the credit card over here, mm-hmm. obviously they know what job they're working on. Yep. They just have to all they have to do is add the same thing that they see on their Jobber schedule, correct?
Yeah, yep. And it should be there automatically. So like no one needs to keep this up to date. So you get a new job in Jobber, it auto ports over to QuickBooks, goes to your credit card management system, and then your guys, when they go buy stuff, they just they click on it and they pick the job name and then they keep going.
Okay. Listeners, I want you to, if you're in the stage of, maybe you guys have already figured this out, but we literally, we're approaching the 1 million mark internally at our business. And I'm telling you that because I'm telling you that this was a pain up to this point, right? So if you haven't experienced this pain yet, it's going to come if your business continues to grow. And I'm asking these questions because, Ben, had I asked these questions a month ago, this process, it would have saved me probably 40 hours of my time, because you have so many platforms going on in this day and age running a business. You're okay, where's the end all be all? the end all be all has to be QuickBooks. Like,
Yep.
let's just set the record straight on that. But Jobber is so useful in so many different ways. It's got a great user interface. It's very user friendly, right? I highly recommend using it.
Yep.
And Jobber, if you're listening to this, yes, we would take a sponsorship. I feel like I talk about them all the time. I'm like, guys, when are you going to sponsor this? But no, seriously, like whether or not they sponsor it or not, like enjoy using Jobber. But the pain that we had is like, all right, we're inputting this stuff in Jobber. So therefore we need to do all of our job costing in Jobber because that's where the job names live. And that's where we're like our team is consistently living. Our back end office operations person is living there. I'm living there. I'm looking at that stuff, right? Mm-hmm. I do my QuickBooks stuff on Mondays in the mornings, but I'm not there every single day. But this is gold. So listeners, if you're listening to like what Ben is saying, like you can set it up to where everything syncs up and this will save you a ton of time. I promise you, because I just went through it.
Yeah. And the job costing in Jobber, they recently brought that functionality out and it's new and they're working on it. The same thing that I've said earlier, though, applies, which is that you can't reconcile Jobber at all. So, like, if your team goes in and they fat finger something into the system, you have nothing to compare that to. Like, maybe they did spend $1,000 at Home Depot for that job. I don't know, because I don't have a bank statement that I could reconcile. So that's the big thing. I for sure recommend using Jobber for all things operational and field management and whatnot. What ends up, and I think to your point, Austin, is the end all be all because of the doubles and triple checks that you can do to make sure the financials are accurate has to be the QuickBooks data. Like you need to go through the data coming from the banks. That's where it needs to be. And then all the stuff that we have to do in the trades businesses to get accurate information on top of it. Not everyone has to do this stuff, by the way. This is just home services, construction, and any sort of trade business.
Yeah, build a software business, right?
Yeah, software is like, we made money and spent money, and that's how much we kept. It's like, sweet. We have bigger problems.
Yeah,
but,
for sure.
Yeah, to your point, it is complicated. But this map, I will say, like, if anyone's going through this right now and they want to handle it themselves, from a meta perspective, this is what you need to do. So you need to have different systems to handle different transaction types. Kind of a pain in the butt to learn. Took us a while to, as we heard from my long-winded story in the beginning, took a couple of years to figure out the right way to approach these. But then you get it, and then you do need to have, your other processes in place around like, how often do I check this? And when do I, go reach out to people about when it's happening? And are we reconciling? Like if you get a lot of subcontractor bills, like if you're in a construction trade and your subs are sending you stuff all the time and you're under 10 million, Bill.com is a very good option. But then you need to reconcile your payments platform, which is Bill.com, against QuickBooks to make sure that your accounts payable is the same. So it gets increasingly complex as you get bigger. I won't go too deep into all that stuff, but it's tricky. But it's extremely useful because if you don't know how much you made on each project, and I don't know, Austin, if you're going through this now around your size, but if you have a field manager that might be compensated off of profitability and you mess up the profitability, now you have way more problems than just not having the right software. Now you have a upset foreman who's not getting comped accurately, or if you have to change it in arrears, which I just don't do, like just bite the bullet on it. That's where this becomes extremely useful because it bleeds into compensation for teams when you build in management layers for your field.
Absolutely. And this is the big driving force. I mean, obviously we need to know our numbers, right? But one of the big driving forces is we have a great project manager on our team, and he handles a little bit of everything right now at our stage. But, one of the things I promised him is I will come up with a comp plan that is, incentive based.
Yep.
But in order to do that, we got to first understand if we're profitable and if we have enough margin to pay a bonus structure out of that, right? And then 2, we need the structure in place so that we can set a bonus percentage off of the profitability of each job.
Yep, 100%. Yep. And it gets more and more intertwined. Like if you have multiple people and then you have to get the commissions based on like per person, and everyone has different hiring rates and whatnot. And you have to have it airtight when you get bigger, because in big construction. So if you're doing like 40, 50, 60, 100, couple $100 million, this is where everyone's comp comes from. anyone in a managerial role, that's their biggest lever is job profitability.
Look, listeners, and we're over the hour mark here, so we're going to start wrapping it up. Ben, no, this has been incredibly helpful. I wish I would have had this episode 60 to 90 days ago, because I would have been way better prepared for putting this job costing report. So listeners, I will continually come back to this. I'm bringing on people like Ben to help add value to your business journey. And I promise you, like, if you're not there yet, this can be a complex thing. It's totally manageable, but like you just heard Ben, like he spent a couple of years figuring out the best way to do this. I spent a significant portion of my time over the last month implementing a job costing structure, and it was painful. It was like, there's just no way around that. And it was painful for multiple people because like I didn't have a great process. And I look back on that and I look at it as like, I could have led that project so much better had I had a better process in place. So if you are approaching the standpoint of where you want to implement job costing, go back and listen to this episode. And ultimately, I'm doing my best to bring on people like Ben who are trusted partners in this, like who I would actually recommend people working with. I met Ben a couple of years ago. Like, what'd you say you're at? Like 40, 45 or 50 clients?
We're
Is that
50,
right?
54 now.
That's awesome. So like whatever they're doing is working, because they wouldn't be growing. Yeah, I think I talked to you whenever you were at like, you had like your first 2 or 3 clients.
Yeah, we've doubled every year. So we're going to double again. We'll be at 100 by the 4th of July next year.
That's incredible. So whatever they're doing is working. If you're at the point to where, you want someone who has spent a lot of time and effort into this, I think you can tell from going back and watching that presentation you put together. They're doing good work at Dialed In. And so, yeah, that's a shameless plug for you, Ben. But
I appreciate it. I'm realizing like I look like a guy in the pitch black. For context for people, I had to go to the garage because my 2 kids were waking up and my office is right off the kitchen. But I appreciate the plug. It's a complicated thing. I had to figure it out myself, and now we can just help people do it faster and have them support it. And so we love doing it. Cool. It's fun.
Where can people find Dialed In?
Dialedinbookkeeping.com. DI Bookkeeping on X is pretty much the 2 places where we're at right now. Don't post as much as I'd like to because got a lot of work going on and we got the kids, but hopefully be getting back and doing a little more of that sharing and teaching as the year wraps up here.
Very cool. Well, Ben, thanks so much for being on the show.
Yeah.
Is there anything else that you'd like to share with listeners?
It's November 1st. On January 1st, that's the end of the year and the tax season begins. So if you are growing your business, your CPA, who will be your tax advisor, which is not what we do, but they'll be really happy if you reach out to them before January 1st so that you can be ready and they can help get your stuff ready super fast. So just from like our industry's perspective, we're all starting to gear up for what's called the busy season based on taxes. So if you're kind of on the fence on like, I'll do this later, you'll get a better experience from your service providers if you do it now instead of in January, because we will all be max paying busy in January. So that's the only thing I'd say. If you watch this before the end of the year, if you need tax representation, go find a good CPA. If you want bookkeeping help, find somebody, but it's better to do it November, December rather than January, because January is when everybody asks, and then you get put at the back of the line. So that's the only thing I'd recommend to people. It's a required thing. You have to do it. Better to do it now. You'll get a better experience. But besides that, Austin, thank you for having me on. Love the podcast. I look forward to keep following along.
That's great. Well, thanks again, Ben. We do appreciate your time. And listeners, thanks again for listening to another episode of the Owner Ops Podcast, where we distill tips, tactics, strategies about building local service businesses. If you are enjoying this content and you're listening on Apple or Spotify, would you please just leave us a quick review? 5-star review would be greatly appreciated. Just like building a local service business, podcast is very similar how the algorithms work. 5-star reviews help us out a ton. And if you're listening on YouTube, we would sure appreciate a like and subscribe to the channel. You will get notified every time that we drop a new episode. We are publishing episodes weekly at this point, and then we also distill the learning lessons from the episodes into a weekly newsletter. So you can sign up for the newsletter at ownerops.com/newsletter. That's OWNROPS.com/newsletter. bookkeeping.com/newsletter. We're going to wrap this episode up. We'll see you guys next week. Don't forget, work hard, do your best, never settle for less. See you guys next week.